What's up, guys? It's Rob here, and today we're going to be talking about AQST stock, Aquestive Therapeutics. This is a highly requested stock on the channel. A ton of people have been asking about it in the live streams, in the comments, so we're going to do a full breakdown of it and talk about its pump potential, as well as some catalysts and some potential trading strategies that you can take with it. So first off, we'll look at the year chart and just see that they have been doing fairly well over the past couple of weeks, right? They've actually been soaring up. This is for a couple of reasons. One, they have an FDA decision coming in December. They're expecting to potentially be approved for a drug in December, and they did just have a good earnings call. So there are a couple of reasons why they're pumping up, as well as the fact that it has been hyped up a little bit on the internet, right? If people are commenting on it on my YouTube videos asking for a breakdown, obviously it's being touted somewhere. So we're going to be doing a breakdown of it. And the first thing to know about AQST is what they do. Just for those of you who are new, who don't actually know about this company, well, what they do is identify, develop, and commercialize products to address patients' unmet medical needs. And that essentially means that they're a pharmaceutical company, right? They're making drugs that people can take to deal with various issues, and they're in the healthcare and life sciences sector of the stock market, which means they are very volatile, right? They can obviously move up and down a ton based off of news of studies that have either passed or failed and gotten FDA approval or not, right? So they're extremely volatile, huge pump potential for these kinds of stocks, but also big downside risks. So that's something to keep in mind with AQST, especially if you look at the 2-year chart, you can see that they are extremely volatile, right? They've been up to highs of $10 per share and as low as $1.41. Right now, we're somewhere in the middle. We're around $6 right now. So they're really, it could go either way. It could go back up to 10. It could go down to 141. We're really waiting for the FDA decision that's going to come out in December, but we will be talking about the potential catalysts that this has. There are 3 major catalysts that this has going for it. The first we'll talk about is short squeeze potential, right? People have discussed this on the channel. Some people are saying that this could be in for a short squeeze, and we're going to break that down. So what it has going for it is low short interest, which isn't actually good, right? There's a very low short interest on this stock. We're going to look at the Ortex data in a second. However, people have also touted it as having a low float. So that is a good thing, actually, right? Low float stocks are much more likely to squeeze, but it only has 5+ days to cover, which is actually, this is actually a decent part, and 55% utilization. So let's break it down on the Ortex and show you guys what I'm talking about, right? The short interest as a percentage of the free float is only 3.43%, so relatively low, incredibly low, actually, right? And 1.3 million shares are short, not the highest. Days to cover, the way this works, for those of you who are unaware, is they take the average volume that the stock typically trades with and figure out how many days worth of average volume it would take for all the shorts to cover if they had to. And if you look at the chart, you actually have the volume chart on the bottom of AQST's chart. You can see that although the average volume is very low, there have been periods where we've had very high volume. For instance, this day, I believe June 25th, we had 3.9 million shares being traded. So about 3 times the current short interest, and we only moved about 20 cents from $4.33 to $4.12. So not that big of a move for that many shares being traded. Obviously, this isn't the highest short interest as a percentage of the free float, which leads me to believe that the probability of a short squeeze happening is relatively low, right? It doesn't seem too likely that we're going to have a short squeeze, but that's all right because there are some other catalysts that this thing has going for it. Second, earnings momentum, right? We just had earnings on the 2nd. They just came out with actually positive earnings, right? They didn't make money, but they beat expectations, so they were doing good on that account. They were expected to lose 40 cents per share. They made, they only lost 37, so it wasn't a massive win. Revenues were up 10% above their expectations, which is actually what led to that win, and the stock did bump up on the news. Now, this is actually important because you can look at past earnings calls and see that in the past we have gotten the earnings call coming out and we've risen a bit, and then we continue in the next couple of days and weeks to rise even more and more. Now, we are following potentially a similar pattern, right? We did have our earnings call and we did rise a bit, and we'll see if in the days and weeks we can continue to rise more and more. However, oftentimes with earnings calls, the stock tends to move the most the next couple of days, and it looks like we already have moved a decent amount, right? We were already uptrending, and we did actually see a big boost to price, getting us past $6 the days after the earnings came out. Now we're at $6.09. We're getting very close to either using $6 as support or breaking down below it, right? We're actually having a little bit of a red day today, so people are hoping that we will use 6 as support, but what's important to note is that we have the earnings. They've come out already, And they did contribute to positive momentum, and we could continue to rise off of that. However, it's not a guarantee, right? Just because we had positive earnings, keep in mind this company is still losing money and has been for a while. They may have to dilute at some point to keep operations going, so that's always a worry, but overall not the worst thing, right? The fact that they're beating earnings expectations is pretty good for the stock and does explain why they have been rising, even more. Despite already uptrending, they've actually started a faster uptrend than they were on ever since the earnings came out. So that is good news. However, that's not necessarily a reason to be buying the stock right now because they already have risen quite a bit. So unless you're betting on this rise continuing, which it may, that's not the best catalyst to get this thing moving. The real catalyst that everyone cares about is FDA approval for one of their drugs, Libervant. And this is a diazepam used for seizure management. And it's actually, if it's approved, it will be the first oral option. So this is by far the most promising catalyst. There really is a big chance that they will spike up massively in price if this thing is approved. The date that we're watching very closely is December 23rd, because this is when the FDA is going to give their decision on whether or not this drug can be used, right? Whether or not they give it their stamp of approval. And it's impossible to predict what the FDA will do. In fact, if you did know what the FDA was going to say about this drug before the date, it would be illegal to trade with that information because that would be considered insider trading. That's how they keep people at the FDA from doing this kind of stuff, because they really could make a lot of money. If they just told their friends or relatives, hey, we're going to approve this drug tomorrow, you could buy up the stock and almost certainly make a massive gain. So it is a very risky catalyst to be betting your money on, right? There's the potential that we could double in price or we could halve in price, right? Oftentimes, these FDA approvals really have dramatic swings in stock price tied to them. So it's going to be very close or going to be very risky holding through that FDA date. However, there is the potential for a massive reward. Now, how I would go about trading this stock. Obviously, not financial advice. There are a couple of ways that you could do this, a couple of things that you could do if you're interested in AQST, if you have a conviction in it. The first is the most obvious play, right? You could obviously buy the stock now and gamble on FDA approval being positive for the stock, right? You could hope that the FDA would approve the stock or approve the drug and hope that the stock price goes up big on that news. You could also, you wouldn't want the FDA to decline the drug, right? To disapprove of it, and then the stock would most likely fall quite a bit. So the most easy to follow trading plan, right? Just buy and hold through the approval date. That's going to be the easiest option people have, but also probably the most risky, right? There's very little that you have to control with this trade. You just are essentially gambling. It's almost a toss-up, a 50-50 if the FDA is going to approve this or not. So not how I would go about doing it, right? I'm very wary of these FDA approval plays because I can't predict what the FDA is going to do. It's not really my expertise. I don't have enough medical knowledge to know if this drug is something that's viable or if it's safe. So really, I'm going to leave that up to the FDA and not try to predict their movements. So the second thing that you could do, this is a very time-consuming strategy, but you could try to trade the FDA decision momentum. And what I mean by that is you could watch the charts, you could watch out online for FDA decision on certain drugs on December 23rd. And if the FDA ends up approving this drug, then you could try to get in very early. You could try to get in on the first couple of bars because oftentimes the stocks tied to drug approvals will rise for days, if not weeks after FDA approval. So you could try to get in very early. Obviously, most of the action happens very shortly after the FDA announces it, the first couple of minutes, because there are oftentimes institutions watching these companies that have algorithms that will trade the stock for them, so they don't even have to waste their time watching the stock. They can just set their algorithms to buy if the FDA has good news for them. So that's another way you could potentially go about it. But once again, very time consuming. You're just going to have to be on your computer all the time on the 23rd of December waiting for the FDA's decision to come out. And not my favorite thing to do, right? I also think this is fairly risky because sometimes you can see buy the rumor, sell the news situations, right? Oftentimes it's not the case with these kinds of companies because it is a very positive fundamental development if they actually get FDA approval for a drug. Once again, a drug that's as important as this, the first oral option for seizure management, at least as far as diazepams are concerned. So it would probably raise the price if they got FDA approval, almost certainly. But there is always the chance that it's a sell the news situation. Very unlikely, but you're not guaranteed to make money with this strategy. Now, The third strategy, which is one that I would be most likely to employ if I was interested in trading AQST, is buying the stock and selling options, or if I currently own the stock, selling options on it, right? So what I mean by that is AQST has a price of $6.06 right now. And if you look at the options for AQST, there are a couple of different strike dates you can choose from. However, the most alluring one is December 17th, because this is 6 days before the FDA approval. Now, currently, the bid and ask on 750 calls are between 35 cents and 45 cents. So you could probably sell them for 40 cents and someone would probably scoop up that order. And that means that if you were to buy up shares of AQST for about $6, you'd have about 40 cents of protection to the downside if you then decided to sell these call options. And if you wanted, you could still hold through December 23rd as long as those options didn't expire in the money. And you could gamble on FDA approval. Now, this option is a strategy that I like to employ with stocks, right? Buying the stock and then selling call options for a higher price, strike price, than what I paid for the stock, because that way I'm winning pretty much either way. If it's a stock that I like and want to hold for a long time, I buy into it and I'm either getting some downside protection by selling options on it, collecting the premium, and if it goes up to 750, well, I was willing to sell at that price anyways, right? That would already be a gain from $6 to 750. I may as well sell the stock at that point. And I would also have collected the premium on top of that. And that's all taking place in just about 5 weeks, right? This strike date is about 5 weeks out. So it is an option that you have to make some money if you're interested. Obviously, not financial advice. I'm not recommending that anyone do that, but that looks like the most promising strategy to me. So that's what I would be interested in. Out of the 3 ways to potentially trade this, that's what I would be looking at the most closely. But you can do it however you want, right? If you want to gamble on FDA approval or try to trade the momentum after the fact, those are both completely viable strategies. Now, that's what I have for you on AQST today. That was the deep dive that we did. So if you guys enjoyed the video, please consider hitting the like button and subscribing to the channel for more of these kinds of videos. I did actually put a decent amount of effort into making this presentation. It took a little bit to make, right? I had to learn how to use this flowchart software. So anyways, if you guys appreciated it, then feel free to hit the like button. Anyways, guys, I'll see you in the live streams at 9 every morning. Other than that, have a great day. Bye.